So students, how are you? And as you do well to remember that we are doing chapter 10, that is audit of banks. And in our last session, we had left at the place of prudential norms relating to asset classification, income recognition, and provisioning. So students, I had told you in the last lecture that when an asset ceases to generate income for the bank, it is called non-performing asset. It means that when it stops generating interest income for the bank, the client, the borrower is not able to pay interest, pay installment, pay EMIs as per terms of sanction. And as a result, the advance, the asset stops generating income for the bank. And in such case, it is called as non-performing assets. So assets which are doing well, these are called standard assets, as we had discussed in our last lecture. And I had also told you about special mention accounts. So special mention accounts, again, I am repeating that these are standard assets, but they are showing some signs of stress. So if corrective actions are not taken well in time, then these might turn into non-performing assets over a period of time. Yes, guys, is it clear? Yes, students. Is the point clear? Drop mail in BOS mails so that we can proceed further. Yes, students, drop mails that you have understood this issue. What is the difference between a standard asset and a non-performing asset, and what are special mention accounts? Yes, Pranav, you are saying that it is clear. So I think we should now move forward. So as far as NPAs are concerned, there are three categories. There are three categories of NPAs which are substandard assets, doubtful assets, and loss assets. Now, students, always remember that these guidelines have been prescribed by Reserve Bank of India. These guidelines on asset classification, on income recognition, and provisioning have been prescribed by Reserve Bank of India, and these are required to be followed by the banks in preparation of their financial statements. Okay. So what are substandard assets, friends? So basically, first we shall try to understand generally what does substandard asset means. So a substandard asset or a substandard account would show some signs of weakness, and these could result, there is a probability that these could result in some loss to the bank. So such assets are substandard asset. This is the general meaning of substandard asset, but there is also a technical part. Now, how this is a general understanding of substandard asset. Now, financial statements can't be prepared on the basis of general understanding alone. So, therefore, RBI has prescribed guidelines for classifying assets into non-performing assets and resultantly substandard asset, doubtful assets, and loss assets. Okay, Srinivasan, you are saying substandard means not considered as NPA? No, substandard is in fact NPA. These are all three NPAs collectively. Within these NPAs, there is separate classification: substandard asset, doubtful asset, and loss asset. Yes, Srinivasan, is it clear? So, students, RBI guidelines state that in respect of a term loan, the account becomes non-performing, means NPA, when installments and or interest is overdue for more than 90 days. So you remember, students, that we had learned three things about advances. One is term loan, how advances are classified in balance sheet of bank. I had told you last time, and I had also shown you a balance sheet of a nationalized bank also. One is term loan, another is cash credit overdrafts, and one is uh, bills purchased and discounted. Yes, Srinivasan, you are asking why is Caro not included in bank audit? Because uh, by virtue of law, by virtue of legal provisions, Caro has not been made applicable to a banking company. Okay, probably lawmakers have thought that it is a very specialized nature of business, and many of the points which are there in Caro may not be applicable to a banking company. Okay, so that seems to be the logic. So, like in case of a term loan, students, if installments and or interest is overdue for more than 90 days, then it becomes a non-performing asset. Yes, Sanya, you are saying what is the difference between outstanding and overdue? Yes, good question, Sanya. Outstanding means the amount which is there in the balance of the borrower, outstanding amount. And overdue means, say if I was required to pay installment or EMI, say on 5th of a month. So I failed to pay that installment or EMI by 5th of that month. So at the day end, that the amount has become overdue. So it was overdue on 5th, but I didn't pay by 5th or before 5th. So at the end of a particular month, the amount would become overdue. Yes, Sanya, is it clear to you? So technically, the meaning, the definition of overdue is When overdue means an amount which is not paid by the due date, which is fixed by the bank as per agreement between the bank and the borrower, as per the terms of sanction. No, Tambeshwari, not overdue. You are getting it totally wrong. Overdue doesn't mean advance amount. Say, I'll give you a simple example. Say, I had taken a car loan from a bank and say my monthly installment is rupees 20,000. I am supposed to pay rupees 20,000, say by 10th of every month. So I am paying those installments regularly, but say for a month, I failed to pay the installment by 10th of a particular month. So rupees 20,000 would become overdue as on close of that date. Yes, Tambeshwari, is it clear? It is not advance. It is reverse of advance. So I was required to pay, but I have failed to pay. Srinivasan, first of all, you are not required to disclose. It is part of the bank's responsibility. It is part of the bank management's responsibility to prepare financial statements. Again, we are losing sight of the fundamental thing. So obviously, overdue amount would be seen from the terms of sanction. See, when the banks have got a elaborate system of internal control in respect of advances, and when you see one account, it would on the top of it, it would also highlight overdue amount. And these days, the system is marking NPA as per predefined criteria. As per these criteria, the system is identifying these NPAs. The auditor is supposed to only verify those disclosures, those things, whether the classification is correct or not. Yes. So if installments or interest is overdue for more than 90 days in respect of a term loan, so there are separate guidelines for term loans. Then there is in a similar manner in respect of bills purchased and discounted. So if say a bill has been purchased and discounted by the bank, and it remains overdue for more than 90 days. For more than 90 days. Then it also becomes, then this facility, it also becomes NPA. Say the bank has discounted a bill, it has purchased a bill, and it was required to be paid by a certain date. Okay, but the party failed to arrange the funds, and it became overdue on a particular date. So if it remains overdue for more than 90 days, then it would become NPA. Okay. Yes, Kiran Kumarji, you are right. And Sanya, you are saying overdue is receivable, but received on due date, but not received on due date. Yes, it is. Yes, Sanya, yes, you have understood it correctly. Overdue is receivable amount which was required to be received, and it is not received on due date. Perfectly right understanding. So obviously it is as per the terms of sanction which have been agreed between the bank and borrower, at the time of sanction, at the time of granting the loan. Clear? And then there are norms in respect of cash credit accounts. Cash credit overdraft accounts. Yes, Srinivasan, I am coming to that. When it would be classified as substandard and doubtful. I am coming to that. Please keep some patience. Yes, Tambeshwari, you are right. So in respect of cash credit account, the cash credit account becomes NPA when it remains out of order. So I hope that all of you understand the meaning of cash credit account. We have discussed at least twice this term in previous lecture also and while doing chapter 5 also. Yes, students, the term is clear to you, cash credit account. Yes, drop a mail so that we can go further. Yes, students. Okay. So when does a cash credit account uh, is classified as an out of order account? What is the meaning of this term, out of order? So as you can understand generally from the from reading these three words, that the account is out of order. It means that it is not running as it was desired. Okay, it is over the sanction limits. Now this is the general understanding. But then there is also a technical part of it. There are guidelines or RBI guidelines which state when a cash credit account, when an overdraft account becomes out of order. So there are three things, three criteria when a cash credit account becomes out of order. Okay. Yes, all of you are writing correctly. Srinivasan, Kiran Kumar, this is only one of the condition. There are two other conditions. Now, one is when the account is continuously over the required sanction limit. So I am writing SL in place of sanction limit. So SL is sanction limit or drawing power. So this point is, I think, is fairly clear to you. Say CC limit, sanction limit of a party is say 20 lakhs. Okay. And the account is continuously over for 90 days. Continuously over for 90 days. beyond sanction limit or drawing power. So say the account is continuously over for 90 days, um, then uh, then the account would become out of order. Okay, say for 90 days, not even a single day, the balance has come down, down rupees 20 lakhs. It has always exceeded 20 lakhs. Okay, it has, if the balance in the account has always exceeded 20 lakhs for a continuous period of 90 days, then the account would become out of order. Okay. Remember, the word here is, students, continuously. Continuously means that not even for a single day the balance has come down. Okay, so for 90 days it is in excess of rupees 20 lakhs. It is continuously over beyond sanction limit or drawing power. Say if the drawing power is less than sanction limit, even then the account would be, its out of order status would be judged from the point of view of drawing power. Say if in this case drawing power is 15 lakhs, although sanction limit is 20 lakhs, and the account remains continuously in excess of 15 lakhs for a period of 90 days, then it would become out of order. Clear, students? Is this point clear? And second point is that the account, although remains within sanction limit or drawing power, but there are no credits in the account. Continuously for 90 days. Say sanction limit in case of account is 20 lakhs. Okay. The balance, say in January, February, and March, say for 90 days, it is 18 lakhs something. It has never even touched 20 lakhs. So you would say that the account is within the sanction limit. But why it is being classified as non-performing? So because a cash credit account is required to be operated actively. That is why such a criteria has been put in these guidelines. So if there are no credits in the account continuously for a period of 90 days, then also this account would be classified as non-performing. Okay. And third limit, as yes, Kiran Kumarji, you are also writing correctly. That say, what is the third criteria? Third criteria is, although in the above case there are credits in the account, but these are not sufficient to cover interest debited during the period. Say there are credits in the account, say, and the balance has remained below 20 lakhs, and there are solitary 2-3 credits, but these are not sufficient to cover the interest which has been debited during this period. So although one or two credits have come, but these are not sufficient even to service the interest which has been debited during this period. So in such a case, also the cash credit account becomes out of order. So students, all these three conditions you have to remember, and you have to understand its basic application also. As I told you that at intermediate level, as far as this chapter is concerned, only very basic questions are asked. These may be in case study or a descriptive type question. So there are good chances that a question occasionally creeps in on NPA, either 2 marks or 4 marks, in whatever way. Yes. So students, have you understood all the three criteria for classifying a cash credit account as an NPA? So we have discussed that a cash credit account or an overdraft account becomes NPA if it remains out of order. Now, there are three conditions for classifying an account as an out of order status. One is the balance is continuously mark the words continuously. You would make mistake in the exams if you ignore this word. So underline in your module, continuously is very important. So account remains continuously in excess of sanction limit or drawing power. This is one of the condition. Okay, and second is there are no credits in the account continuously for 90 days. And the third condition is, although credits are there, but these are not sufficient to cover the interest debited during the period. So in all these three cases, if any of these conditions is met, then the account becomes out of order. Cash credit account. Okay. So because why these conditions are mentioned in cash credit account? Because it is due to the fact that cash credit account is operated as such. It is dependent. It is how a cash credit account is operated that these conditions have been prescribed in the guidelines of RBI. Yes, stock statement and arriving drawing power also. This is a separate point, Kiran Kumar ji. So yes, Srinivasan, interest debited during the period means interest debited during that 90 days period. Yes, because in cash credit account, banks are charging interest on monthly basis. Clear, students? Yes, is the point clear to you? So we'll see what is there in your module in this respect. So these conditions, students, you have to remember by heart. Okay. And this out of order, these three criteria, you have also to remember and understand. Clear? This is the definition of overdue also, which we have discussed already. Any amount due to the bank under any credit facility is overdue if it is not paid on the due date fixed by the bank. The same point we have discussed already. So students, then we come back again to the basic question that when an account is classified as NPA, as Srinivasan was also asking, when an account is identified and classified as NPA, in which category would it fall? As I told you that there are three categories of NPA: substandard assets, doubtful assets, and loss assets. So where it would fall? So RBI guidelines state that this classification has to be done on a step-by-step basis, in a graded manner. So at the very first stage, when an account becomes NPA, it is classified as substandard assets. So technically, a substandard asset is an asset which has remained a non-performing asset, an NPA, for a period of less than 12 months or equal to 12 months. So first of all, it would be put into SSA category on its identification on its identification as non-performing asset. Say I had taken a car loan and I have not paid uh, 3 installments, and the overdue amount has um, become outstanding for a period of more than 90 days. So immediately, when overdue account has become more than 90 days, then the account would be classified as a non-performing asset. And within non-performing asset broad category, it would be classified as substandard asset. Okay. Srinivasan, graded means step by step. So first an account is classified as substandard asset for a period of a year or so. Okay. So you see the definition of substandard asset. Substandard asset would be one which has remained NPA for a period of less than or equal to 12 months. So when an account is first classified as NPA, it would be classified as substandard asset. It would be classified as NPA with a type substandard asset. Okay, so it would be a substandard asset. It just signifies that the party is not repaying the installments in time, and if some corrective action is not taken, or if the party doesn't turn up in paying the installments, then bank is definitely going to suffer some loss. Some loss. There is a probability that the bank would suffer some loss. So that is the general meaning of substandard asset. So say uh, 1 year has passed by. This we continue this example. 1 year has passed by and the party has still not paid any installment. Okay. So at that time, it was classified as substandard. When it has remained in substandard category for another period of 12 months, then it would be classified as doubtful asset. Now doubtful means now there is a definite probability that the bank is going to suffer loss. So the probability now increases because the account has remained as substandard asset for a period of 1 year, and there is no action on the part of the borrower to pay the amount. So obviously, the recovery of the loan advanced by the bank is in danger, is in real danger, and there are realistic chances now that the bank is going to suffer loss. Clear? So that is the meaning of doubtful asset. Yes, Srinivasan, is it clear to you? Yes, we are coming to provisions. We shall come to provisions. So whenever an account is classified as a non-performing asset, provisioning is to be made. So as you can see from this table, in case of substandard asset, provision at the rate of 15% is required. 15% of what? 15% of outstanding amount. Whatever the balance is in the party's account, 15% of outstanding amount provision is required. So that is why these are called prudential guidelines. Prudential means that the management of the bank is taking care that out of caution, out of conservation, it is making a provision that that we may suffer some losses. That is why such provisions have been prescribed and fixed by RBI. Yes, Srinivasan, is it clear to you? Yes, please, Srinivasan, is the point clear to you? No, Srinivasan, these are prescribed by RBI. These are decided by RBI. It is not on the discretion of the bank. Okay, there is a master circular of RBI on on prudential norms relating to asset classification, um, income recognition, and provisioning, and it has to be followed by the banks in its letter and spirit. So first, an asset would be classified as substandard asset. Upon its identification, for the first 12 months, it would remain in that category, meaning that it is a non-performing asset, but within non-performing asset, it is a substandard asset. Okay. Then doubtful asset is the one which has remained in the substandard category for 12 months. So in the asset has remained in the substandard asset for 12 months. Now it would move to next higher category. This is the meaning of graded, which I was trying to convey to you. So it would move to next higher category, doubtful. So within doubtful also, there are three categories: D1, D2, and D3. So doubtful up to 1 year, D1 doubtful up between 1 to 3 years, D2, and doubtful more than 3 years. It is D3. So as you can see, in the doubtful assets, provisioning also increases. In case of substandard asset, the provisioning was at the rate of 15% only. Now, in case of doubtful asset, the provisioning has increased. In case of D1 asset, in case of D1 category, it is this you can see from the table which I am sharing with you, which is in your module. It has increased to 25%, and then D2 40%, D3 100% on secured amount. Yes, there is no logic behind that. Just just a graded increase. You can say there is increase because now there is a increased likelihood, increased probability that bank is going to suffer loss. Therefore, RBI has in its wisdom decided to fix these percentages for provisioning. Okay. So like say there is we again take a simple example. There is a car loan, or say any loan, any term loan, and say outstanding balance in the term loan is 10 lakhs, and the term loan is fully secured. Fully secured means that it is backed by securities. Fully secured, the whole amount is secured. Either the property has been mortgaged, or it is backed by some asset, obviously in case of a term loan. Okay. Yes, Tambeshwari, I am coming to that. So if the amount is fully secured, then in D1 category, say the outstanding balance is 10 lakhs, in D1 category, provision would be required to be made of 25% of 10 lakhs. That is 2.5 lakhs. And suppose it is a D2 category in this example, then the provision would be made of 40% of 10 lakh. That is 4 lakhs. And similarly, say if it is D3 category, then provision would be 100%. Now the likelihood, the probability is turning into reality. So provision would be made of complete outstanding amount. Yes. Clear, students? And Tambeshwari, yes, you are asking what do you mean by secured and unsecured? Say if in this example, the outstanding balance is 10 lakh, but it is secured only to the extent of say 5 lakhs. So the remaining 5 lakh portion would be unsecured. So in case of unsecured portion, the RBI guidelines state that you have to make 100% of provision. So in respect of secured part, that is 5 lakh, provision would be made of 25% of 5 lakhs. And in respect of unsecured part, that is say balance of 5 lakhs, provision would be made of 100%. Yes. Is it clear, Tambeshwari? Yes, bank yes, Srinivasan, banks prepare these days. These are generated from the system. These all percentages, these all calculations are fed. Banks are taking out a printout of these sheets as at the year end for verification by auditors. Yes, Tambeshwari, you are asking save mean. What do you want to ask, Tambeshwari? Which point you are referring to, Tambeshwari? Who is save the amount? Tambeshwari, you are not clearly able to express what you are wanting to ask. So it's better when Zoom interaction will open, then you can ask there. Okay. And there is a third category, which is loss asset. So loss asset also provision has to be made of 100%. So loss asset would be one where loss has been identified by the bank or its internal or external auditors or RBI inspection. Say the bank's auditors have identified some asset as loss asset. It means that maybe security is entirely missing or there is no chance of recovery and the amount has not been written off totally. Then also it is a total loss for the bank and provision has to be made at the rate of 100%. Okay. And few important things, students, you have to remember in context of NPA. What are these important things? These important things are that asset classification. Now, whether an asset is to be classified as standard or non-performing is made on the basis of record of recovery. That is very important, students. All this is fundamental point, basic point, basic fundamental point. Do not confuse it with other points. Look, I'll give you an example. Basic fundamental point. Say, yes, Srinivasan will come to that. After we finish this topic, we'll come to that. So, say a borrower has taken a term loan, okay, of say 50 lakhs. Now, this term loan is fully secured. Say the primary security, we assume that it is a machinery against which loan has been advanced. The machinery value is also say 80 lakhs. Beside, there is some collateral security. There is a property also mortgaged. Say it has also a value of 50 lakhs. Okay. So the term loan is fully secured. It is backed by securities. But when we see the account, we find that the party is not repaying the installments on time. And if the installments remain overdue for a period of more than 90 days because it is a term loan, as we have learned just now in respect with regard to RBI guidelines in respect of term loan, that a term loan account becomes NPA if installment and or interest remain overdue for a period of more than 90 days. Okay. Then it would be classified as NPA in any case. Now, although it is fully secured, so do not get confused fully secured with classifying an account as NPA. Always remember that asset classification has to be done on the basis of record of recovery and not on the basis of the security which I am having. This would be helpful in determining the provision. That is its significance. Or this would be helpful in recover to the bank in recovering the money from the party, because the bank can sell those securities. So is the point is this is very important point, students. Remember what remember say if the account, if in this case the party has been sanctioned a term loan of 50 lakhs here, there is a security of rupees 2 crore mortgaged with bank. But if the account is not operating satisfactorily, if the installments are not coming in time, then it would be classified as NPA in accordance with RBI guidelines, whatever be the amount of security. Yes, which concept you want me to explain once again, Srinivasan? Now I am explaining this concept twice. Yes, which concept you want me to explain, Srinivasan? Again. Okay, so we shall move further. And another important point, students, in respect of NPAs is that NPA classification NPA classification is done borrower wise and not facility wise. What is the meaning of this? Say, uh, say if there is a borrower which has taken 3 facilities from a bank, 3 types of facilities it is enjoying. Say we take a simple example. There is Mr. X. Mr. X is borrower. He has taken a say term loan of rupees 50 lakhs. Term loan 1, say he has taken term loan 1. He has also taken term loan 2 for purchase of another asset, say of 20 lakhs. He has also taken a housing loan of say 50 lakhs. Say if 2 of its accounts are operating satisfactorily, but one account is not operating satisfactorily, then what would happen? Would these accounts would be classified as standard asset and this account would be classified as non-performing? No, this is not the case. Because NPA classification is done borrower wise. If your one account is not running properly as per RBI guidelines, then you are classified as a non-performing borrower. All the three facilities would need to be classified as NPA. So this is again, students, a point worth remembering, and it is also quite important from your examination point of view. Good case study based question MCQ can be framed from this point. This point is clear to you, students? So we'll see what is there in your module. First point is classification as NPA should be based on the record of recovery. Okay, this we have already made it clear. Availability of security or net worth of borrower guarantor is not to be taken into account for treating an advance as NPA or otherwise. The sole and only criteria is record of recovery. How recovery is coming. Okay. And second thing is asset classification would be borrower wise and not facility wise. All facilities would be termed as NPA. Like this example has also been given. Like I had told you that say Mr. Raman has availed two loan facilities, a car loan and a housing loan. He is regular in depositing housing loan EMI, but has not deposited last 4 EMIs. So it means last 4 EMIs are required to be paid monthly. So he has the installments, the EMIs have become overdue for say more than 90 days. So these have become overdue for 120 days. So, however, in this case, therefore, not only the car loan, but the housing loan would also be treated as NPA, although it is going good and there are no irregularities. Because the NPA calculation is borrower wise and not facility wise. So, all the loans taken by Mr. Raman would be classified as non-performing asset. Although one or two may be running regularly. Okay, yes, Tambeshwari, you are right. Clear? And students, this point is also worth understanding and remembering from an auditor's point of view. Say you are the auditor of a branch, okay, and you find that one account, say there there are overdues in that account. Okay. So, but suddenly, as it close of year, near the close of year, say near 25th March, the account suddenly is regularized. The overdues are cleared. So, as an auditor, yes, Srinivasan would be doing case study and MCQ definitely tomorrow. Okay, first of all, let me finish all the topics. Okay. We will be doing case study and MCQs definitely tomorrow, along with the remaining topic. Okay, so say overdues are cleared near 25th of March. So what is your duty as an auditor? So you have to be careful that the account which has been regularized, there is no foul play in such a regularization. That sometimes say branch manager or the management, they may be handing gloves with the borrower, and they may grant some fresh facility, say temporary overdraft, and by using that amount, it would be regularizing the term loan account. So that should not be the case. If the regularization has come from genuine credits, then it is okay. The party has brought the money, the borrower has brought the money, then it is okay. But it should not be a sort of window dressing. Okay, just to regularize the account near the balance sheet date to avoid slippages into NPA and to avoid provisioning in the balance sheet of the branch, because the branch may want to show higher profits. Okay, so this becomes the duty of the auditor to see that the accounts which are regularized near the balance sheet date, the credits are have come from party sources. These are genuine credits. There is no foul play. Okay. Another point: government guaranteed advances. Now there are some cases where some loans, some advances have been guaranteed by government. Now, government guarantee can be of two types: central government and state government guarantee. Okay, so like say, for example, some power utility company, uh, which is in which state government has a stake. The state government have given may have given a guarantee, so that it can take uh, a loan or advance from a bank for meeting its requirement. So in respect of state government advances, there is no difference. It would be classified as NPA. If the recovery is not coming, if it falls within the NPA norms, within the prudential norms as decided by RBI, as in case of other parties. So say if it is a term loan and it meets more than 90 days norm, so the account would be classified as non-performing, and both for asset classification and income recognition purpose also. So I am coming to income recognition part later on, a little bit later. So keep patience of that on that count. In respect of central government guaranteed advances, the only difference is that although the account may meet NPA criteria of overdue being more than 90 days, say in case of a term loan, but the account would still be classified as standard. But for income recognition purposes, it would be regarded as NPA. Okay, so you would be gaining uh, greater clarity about it when we come to income recognition part. Okay, for the time being, you can understand this much. And another point is, yes, Srinivasan, you are asking how the auditor will check the audit evidence. In which context you are asking, Srinivasan? Obviously, he would be seeing the bank books that some accommodation has not been provided by the bank management, by the branch itself. It is not that he would see the source from which money has come. He would go to the party. It is not that. The point is that the credit should come from the client. Okay, if he has deposited the money, then it's fine. It should not be a sort of foul play or accommodation on the part of the bank. Okay. So you are now asking how will the auditor check the audit evidence relating to asset classification? Obviously, he would be reviewing the accounts. He would be reviewing the operation of the accounts. Now, when he would be sitting on the system, he, he would be testing those accounts, sample of those accounts which he has chosen for testing. Okay. And there are a host of other statements which the banks are giving to their controlling authorities. So which show overdue status. So he would go through those statements and would identify that these accounts are not running regularly. So these are all the sources from which he would be obtaining audit evidence. Yes, Tambeshwari, what you are asking, any one term? Which one term? Not clear. Tambeshwari, write your messages clearly. So advances, now there is another concept, advances under consortium and asset classification relating to that. So it is again in context of asset classification. So consortium, students, you understand consortium means when few banks get together to fund a large exposure. Okay. Say if there is some corporate, say if it wants exposure of say 500 crores, then one bank may not be willing to take that risk. So what they do, they get together and a joint appraisal is done and sanctioning is made, and there may be one bank which is having major share of exposure, and other banks maybe participants to a lesser degree. So, but you have to understand that in case of consortium finance also, in case of advances under consortium also, each individual bank has to see whether the account meets the potential norms on asset classification. It is not that this account, this one big account, has to be seen by combining its track of recovery in all the 3 4 banks which have lent money to it. It has to be seen bank wise. Okay. Is that point clear? So it has to be seen bank wise. Say like 4 branches of say A bank, B bank, C and D bank. These are joined together to fund a borrower. Now, as far as asset classification is concerned, whether it would be decided bank wise. So say in one bank, the account is running regular, but in another bank, it is not running regular. Okay, so that bank in which it is not running regular, it has to decide upon its asset classification depending upon RBI prudential norms relating to its share of loan. Yes, is the point clear? So as far as drawing power in consortium is concerned, this we have discussed yesterday in not yesterday, in our last lecture. Yes, yes, Srinivasan, yes, it can be done. You would be reading about it in finals. It is not part of your syllabus at intermediate level. And one thing, students, I wanted to discuss with you, it relates to income recognition. So when an account turns into NPA, one effect is that bank has to make provision, and second effect is that it stops applying interest in this account, in the account which has been identified and classified as NPA. This I told you last time also. So it has these twin effects. So the branch would have to stop applying interest, and if there is any interest debited which is not realized, it has to reverse that also. Clear? So these are the prudential norms on income recognition. So now you can see we were discussing central government guaranteed accounts and state government guaranteed accounts. So in case of central government guaranteed accounts, where there is guarantee of central government, in such accounts, if the account is not regular, if it is going to be classified as NPA, suppose it is a term loan and it has met more than 90 days norm, it would still be classified as standard because it is central government guaranteed, and as central government guarantee, it is a sovereign guarantee. But for income recognition purpose, it would be classified as NPA, meaning that income would not be recognized on such account. Okay. Yes, yes. Borrower has to repay. He is free to repay. Yes, Sanya. Clear, students? Now, students, I had told you that NPA classification is done in a step-by-step manner. Graded. In a graded way. First of all, when NPA is identified, it is classified as substandard asset. Then for 12 months, it remains in that category. Then it is classified as doubtful, that we had discussed there are D1, D2, and D3. But there are there are exceptions to it. And it is stated expressly in RBI Master Circular on Asset Classification, Provisioning, and Income Recognition, that in certain circumstances, it is not necessary that banks follow this step-by-step approach. Now, which are those circumstances? Now, which are those circumstances? Now, those circumstances are when there is erosion in the value of security or frauds committed by the borrowers. Erosion means that the value of security has drastically reduced. There is erode. Erosion, the word erosion is derived from erode. Okay. So when there is it's when value of something has reduced, has there is a diminution in its value. So then in such case, it would be straight away classified as doubtful or loss asset as discussed. So first point is erosion in the value of security can be reckoned as significant when realizable value of security is less than 50% of value assessed by the bank or accepted by RBI at the time of last inspection. Say, say the bank had given loan to a borrower on strength of some security in good faith, and later on bank comes to know that the valuer had given wrong valuation and the value of security is say less than 50% of value assessed by the bank. Okay, say if the value assessed by the bank was uh, say 1 crore and the security value is now say 40 lakhs, or due to some reason say the security value has come down. Okay, so in such a case the account may be classified as straightway into doubtful category, and then provisioning would also be as applicable to a doubtful asset category. Okay, so you need not wait for a complete 1 year. For a period of 12 months, first classify it as substandard asset, then doubtful. Straight away, you can classify as doubtful and make increased provision instead of provision applicable to substandard asset. Okay. And second point is, if realizable value of security as assessed by bank is less than 10% of the outstanding. If due to some reason uh, the realizable value of security is less than 10% of the outstanding amount. So whatever amount is outstanding, the realizable value of security is less than 10%. So the value of security would be ignored and the account would be classified as a loss asset straight away, because these guidelines have been made with the sense that now security value is negligible and therefore it is necessary that 100% provision should be made and the account should be classified as a loss asset. Clear? Yes, Srinivasan, you are stating income we will record only when it is actually received. Then why we need to reverse? You have not heard it correctly. I have told you that only that income has to be reversed which is unrealized. Which is unrealized. Say bank has debited interest and the account has later on become NPA, but the interest which has been debited is still unrealized. From the future, bank would not be applying interest, but what about the interest which has been debited but not serviced? Yes. Yes, Srinivasan, is the point clear to you? Okay. So, and there are some kind of loans like loans against term deposit. So like your FD is there and you are in need of funds. So obviously, generally such accounts do not become NPA because say there is a FD of rupees 10 lakhs and you have taken loan of rupees say 8 lakhs against it or uh, or 9 lakhs against it. So obviously uh, there is adequate cushion and the account is not going to NPA, going to become NPA because the bank has the strength of liquid security. Okay. So that is why students, whenever you create a loan of this kind, the banks always keep some margin, say 10%. So if your FD is of say rupees 1 lakh, so you would be able to get a loan. You may be able to get a loan of rupees 90,000. So 10,000 cushion is there. Okay. Yes, Tambeshwari, you are asking. I ask after loss asset, the bank what would do. So say if the bank has made 100% of provision, that obviously the bank would be taking all the legal action, like whatever security it has, whatever realizable value it has. Okay, and proceeding against the guarantors, filing legal suits, all these action would be taken by the bank. So another category of NPA of advances to which NPA norms are applicable, students, that is agricultural advances. So for agriculture advances, there are separate norms. So agriculture advances which are given by the banks for to farmers, okay, for raising their crops, for example. So RBI guidelines state that agriculture advances are for long duration crops and for short duration crops. Now, what are short duration crops and what are long duration crops? Long duration crops are which have a crop season longer than 1 year. Like the time between sowing a crop and its harvesting is longer than 1 year. Okay. And the crops which are not long duration crops, these are called short duration crops, which have a crop season of which is not longer than 1 year, like say wheat or like say paddy. So you sow it in June, July, and you may harvest it in October. So the period is only 3-4 months. Okay. So which is a long duration crop, which is a short duration crop? There is a committee of state level bankers committee, SLBC, which decides the crop season, and decisions are and the classification is done according to those decisions. Okay. And what about NPA norms? So in case of a short duration crop, a loan granted for short duration crops will be treated as NPA if the installment of principal or interest thereon remains overdue for 2 crop seasons. So for in case of short duration crops, if the uh, installment or of principal or interest remains overdue for for 2 crop seasons. It remains overdue for 2 crop seasons, then it would become NPA. And in case of duration crop, if it remains overdue for 1 crop season, then it becomes NPA. Okay. Yes, Tambeshwari, there are different type of agricultural products, and this has to be decided by the state level banker committee, which is a long duration crop and which is a short duration crop. Yes, and Srinivasan, you are asking, is there any limit that branch need to have a specific cash balance all the time? Yes, there is a daily cash, there is a cash retention limit which the branches have to follow, and branches usually tend to follow those limits which are decided by its head office, but it is not so hard and fast. Sometimes practically it is not possible to keep cash because some cash is received late in banking hours. It may not be possible to remit it to the currency chest. So yes, as far as your question is concerned, there is a cash retention limit. Okay. So students, we shall be taking a break here for 10 minutes and we'll come back after 10 minutes. So Ashok, there is a break for 10 minutes. students. So guys, before we move further, try your hand at these simple questions. Test your understanding 3. During course of audit of branch of a nationalized bank, you find that system has generated a report marking 10 term loan accounts as SMA. Discuss meaning of SMA accounts and significance of such a classification. Now, what you are going to write in this type of question? Yes, you can write few lines on the mail. Yes, students. Yes, come on, guys. We have discussed this concept. Yes, have you understood the question? You are auditing branch of a bank and you notice that a system has generated a report uh, marking 10 term loan accounts as SMA accounts. So simple question. The question is just asking from you what is the meaning of SMA accounts and what is the significance of such a classification? How this, in what way this classification is important? Yes. Yes, guys, send your answers. Yes, friends, waiting for your responses on BOS mail. Yes, Kiran Kumar ji, you are right. Future potential NPA accounts. So you would be right. You would be stating that SMA accounts are, obviously the full form here is not written in the question. So you would explain that accounts are special mention accounts. These are standard accounts. These are showing stress signals. And uh, if the corrective actions are not taken, so these can become non-performing assets in future over a course of time. So, significance of such a classification is that it helps the bank management to know on which accounts corrective action is to be taken, so that these do not turn later on into non-performing assets. Yes, Nitin, you are also right. No, no, Tambeshwari, you are total off the mark. You are stating that term loan overdue 90 days as per RBI guidelines, so-called NPA. The question is not asking about NPA. The question is only asking about SMA. First, read the question. Yes, Anjali, you are also stating correctly. Sanya, you are also right. These are not NPA, but may turn into NPA later on if corrective action is not taken. So you would write it in this way, 3-4 lines have to be written, and that's all. Okay. And see, test your understanding too. It's very simple. Yes. Rajana Ceramic Private Limited is sanctioned a credit facility of 1 crore 100 lakhs from a branch of LMO Bank. Besides, branch has also sanctioned a one-time bank guarantee of 10 lakhs on behalf of company in favor of a statutory authority. So bank has also given a guarantee on behalf of the company in favor of a statutory authority. Discuss what type of credit facility have been sanctioned by branch along with probable purpose. Yes, it's very simple, guys. Why you are taking so much time? It is just basic fundamental concept. Yes, Kiran Kumar ji, you already know. So therefore, I would not be surprised if you answer correctly. Yes, Nitin Prajapati, you are saying NPAs subcategories. No, Nitin, you're totally off the mark. Now we are asking about test your understanding too. So there is no question here of NPA. Simply understand the question. What it is asking? It is just asking that cash credit facility has been granted by the bank. Now, which kind of facility is it? It is a funded facility because funds have flown from the bank to the borrower in this case. And there is a guarantee we know it is a non-funded facility. And you have also to write purpose of granting such facility. Yes, purpose for cash credit facility, purpose is to meet working capital requirements. And for guarantee, it is obviously uh, in fulfillment of, since it has been given to a statutory authority on behalf of company, it may relate to fulfillment of some obligation which is to be performed by the company. Clear? So it was that damn simple. Yes, Ankit Mishra, you are also right. Cash credit facility is a funded facility, and one time guarantee is a non-funded facility, and purpose we have discussed. Simple theoretical question. Now this question, students, relates to drawing your power. Sorry, drawing power, DP. So calculate the DP in this question. What is given at the end of the chapter in your modules? It would do you no good. It would only harm you. Yes. So the cash credit facility is 100 lakhs. The cash credit facility has been granted against security of stocks and debtors up to 90 days. So it is, you know that a CC facility is granted against security of paid stocks. That is stock less creditors. Okay. And margin is also given for stocks separate, for debtors separate. So you have to see that whether DP computed by CAP for 82.50 lakh is proper or not. Just take a deep breath and just try to figure out whether the DP calculated by CAP is right or not. Just write down on a rough notebook and then see and then calculate. Yes. Apart from Kiran Kumar ji, who else is able to answer without seeing from solution given in the end? Yes, students, come on. This is not typical. This is simple. Uh, s- Now we are having different opinions. Srinivasan is saying that DP calculated by CA is not correct. ES calculated is on DP. Sanya is saying that CAP is correct. What about others? So we'll discuss whether the DP calculated by CAP is correct or not. Yes, friends, those of you who are viewing this lecture, please send your mails calculating drawing power. Now, Bhumika, you are stating 76.5. Anjali is also saying 76.5. Neeru Ben, you are stating something else, 69.87. What about others? So it means, guys, that the concept of drawing power is still not clear to you. That how we have to calculate drawing power, because all of you are speaking in different voices. Yes, anybody else? Only 5-6 mails have come, friends, whereas there are 23 participants in the Zoom meeting itself. So guys, let's straight away go to the solution and see where you have erred, where some of you have made mistakes. So look here, DP is calculated. So value of stocks is 125 lakhs. So always remember that stocks which are uh, damaged, its value has to be reduced. It is stated that value of damaged stocks, fully damaged stocks, which is included in this total value 125. Okay. So this is reduced. So stocks come to 120 lakhs. And less creditors have to be reduced 50 lakhs. So value for paid stocks is 70 lakhs. Then margin is given in respect of stocks at the rate of 25%. So after reducing 25% margin, the drawing power in respect of stocks comes to 52.50 lakhs. Okay, that is, Sanya, you have written correctly. Drawing power for stocks comes to 52.50 lakhs. And what about debtors? Now value of debtors is 50 lakhs. Now it is there written in the sanction letter that debtors beyond 90 days have to be excluded while calculating the DP. So those debtors are ineligible for calculating DP which are exceeding 90 days. So 50 minus 10, 40. So margin on debtors is 40%. So margin is reduced. So drawing power for debtors comes to 24 lakhs. So total drawing power 52 plus 24. That comes to 76.50. Srinivasan, yes, you have calculated correctly. If you have calculated on your own. Okay. And Sanya, you are stating 52.5 on stocks, but 30 on debtors. So I think you have made some mistake. Probably you are uh, how you have arrived at 30 on debtors? Probably you have reduced margin at the rate of 25% from debtors, whereas margin in case of debtors is 40% as provided in the question. Otherwise, your stock DP is totally right. So the DP is total drawing power is 76.50 lakhs. So this question, students, takes into account all many issues relating to calculation of drawing power. Now, here in this question, margin is separately given for debtors and stocks. Ineligible debtors have also to be removed, and value of damaged stocks have also to be reduced. So 3-4 issues have been mixed up and a question has been framed. So it takes into account different issues relating to calculation of drawing power. Yes, Sanya, you are saying I missed included point. Okay, so you have to be careful. Okay, Srinivasan, that's correct. That's fine if you have done it on your own. You are saying that you have already done this question previously. Okay. And students, in CA exams, remember the marks are awarded not only on the basis of your final answer. Okay. Like say in this question, if some chap has made some calculation mistake and the total drawing power has answer final value is not matching with the answer, it is not that he would be awarded a total zero. No, this is not the case. Obviously, say like Sanya, she is calculated correctly drawing power relating to stocks. So she would be definitely awarded marks for doing one correct step. Okay. So even if you make calculation mistakes and you uh, you write the method properly, you follow the steps properly, even then you may be awarded marks. Okay. Clear, guys? And students, in last lecture, I had told you that when banks grant loans, they execute documentation, and they create interest in the security, so that they have legal protection. So there are different ways of creation of interest in security, and which goes by different names, mode of creation of security. So one thing is mortgage and one thing is hypothecation. So hypothecation, students, generally this term is used in case of movable assets like stocks. So when say when where stock is primary security, we say that borrower has hypothecated its stocks with the bank. So banks enter into an hypothecation agreement with the borrower. It is a sort of another name. Okay, it is a legal term. Okay. Yes, definitely she would be getting more than 50%. If it is a 4 mark question, Srinivasan, definitely minimum she would be getting 2 marks. Okay. And what is mortgage? So mortgage, students, again is of two types, registered mortgage and equitable mortgage. So equitable mortgage is an easy way to mortgage properties. Say the borrower has given a collateral security of his house for availing cash credit facility. So the bank would be simply keeping original title deeds and with it, and it would be creating an equitable mortgage on the property. The ownership remains with the borrower, and but the bank has got a charge, bank has got a lien over it, and the original property papers would remain with the bank. Okay. So there are less formalities in equitable mortgage as compared to registered mortgage. In the registered mortgage, a proper mortgage deed has to be registered with the registrar office, in the sub registrar's office, and there are charges. More charges are required to be paid for creating a registered mortgage, whereas equitable mortgage is created on less charges, on a stamp paper of required duty, required value applicable to the state in which the borrower is located. Okay. And another term is pledge. So pledge means where the uh, borrower gives possession of the goods to the financing party, to the lender, and it creates certain interests in those goods by such type of agreement. Like say, when stocks are hypothecated, the stocks remain with the borrower. The borrower is free to sell those stocks from his premises. Whereas in case of pledge, the bank would get certain control over the goods, certain restrictions, okay, certain supervision, certain well-defined interest. Okay. Yes, yes, Kiran Kumarji, you are right. So these are, students, these are legal terms, the way in which security can be created. So you have to understand their names, their meaning, and what is the and what do these signify? Okay, and assignment is a term usually is usually used in the context of, say, LIC policies. Okay, so say you give your LIC policy for availing a loan, so the policy is assigned in the favor of a lender. Okay, and what is set off? Set off is just right of a lender to adjust the money from another account within the within the bank. Okay, say if I am having overdue in one account, and if there is credit in another account, so the banker has a right to set off the debit balance with the credit balance in another account. Okay, so these are the different ways of creating a security, and lien is another term. Lien, you understand? You have also read it in your Companies Act. Just creating a charge on some property, right? That somebody has got a right over that property. Okay. And yes, Srinivasan probably sometime back he was asking about LFAR. So students, as far as audit report in case of banks is concerned, so the auditor would be giving a main report covering the aspects which you have read in your chapter on audit report, and also a long form audit report which is called in abbreviated form as LFAR, long form audit report. Now, what is this long form audit report? So students, basically the detailing of long form audit report is not in your syllabus. It is not there even at your final level. Okay. So first remember this thing, but I will show you long form audit report so that you can familiarize with it. Okay. Um, you can you can understand that what does it contain, so that the picture becomes clearer to you. Okay. Again, what I'm showing you, what I'm trying to share with you, students, this is not in your syllabus. You need not go through it. Just have a glance at it, and so that at the back of mind you would know that this is a long form audit report. This is how it looks like, and what you would also get to know what auditor is supposed to write in it. Okay. So this is the format of a long form audit report. Okay, like this is a long form audit report for a to be given in case of statutory branch audit. Statutory branch audit. Okay, Kiran Kumarji, LFAR is also issued by branch auditors, and it is again being consolidated at the head office level, where statutory central auditors consider the comments made by respective branch auditors. Okay, so basically, uh, it requires the auditor auditors to answer the questions relating to various assets and liabilities items and to give their comments depending upon what they have observed during the course of statutory branch audit. Okay, like for cash, the auditor has to state, does the system ensure that cash maintained is in effective joint custody of two or more officials? Because as per guidelines, the cash has to be maintained in the joint custody of two or more responsible officials. This is as per the internal control procedures laid down by the banks. So similarly, the auditor would write its comments against this item. So, like balances with the RBI, State Bank of India, and other banks. Now, whether the bank balance certificate has been obtained or not, whether the balance is reconciled or not, auditors' observation on the reconciliation statements, like which items are pending for longer periods. Okay, so like this. So similarly, advances. Now it asks lot of information relating to advances. Okay, lot of information relating to advances. Now it specifically asks information about large advances. Now what are large advances, students? And this part, remember, this is also stated in your module. I'll show you where it is written. Large advances are those in respect of which outstanding amount is in excess of 10% of outstanding aggregate balance of fund-based and non-fund based advances, or 10 crores, whichever is less. So say if the advances of a branch reflected in its financial statements are, say, to the tune of 200 crores, then large advances are those which are having outstanding amount in excess of 10% of 200 crores. Okay, or rupees 10 crores, whichever is less. Clear? So you have to write list of accounts examined for the audit. So which accounts did you examine? Their account number, account name, balance. Okay, and it asks different questions about credit appraisal. Now, how was the credit appraisal system of the branch in your opinion? Whether a branch has complied with the procedure laid down by the head office for loan applications, for vetting the proposals. Okay, what in your opinion are the major shortcomings in credit appraisal? Okay, if there are certain shortcomings, then specifically you have to write those shortcomings. Okay, so these type of things. So different questions are asked, say in area relating to credit appraisal, in area relating to sanctioning and disbursement and documentation. Now, whatever accounts you have test checked for documentation, whether you have found any discrepancies, okay, whether you have come across any facilities which have been granted which have been released without execution of documentation. Okay, review of accounts. Now, how the accounts are operated. So these all questions. So it is a fairly long report. And similarly, in respect of probably that's why it is called as long form audit report. So deposits, again for liabilities also it asks different questions about deposits. Like, does the bank have a system of identification of inoperative accounts and internal control? So a lot of question. Now, Srinivasan, this document is not in this long form audit report detailing of it is not in your syllabus. So therefore, I won't be able to upload it because it is not required and it would create unnecessary confusion. So you can just, if you want to go through it for your own interest, for your curiosity, it is available on the internet. You just type long form audit report, revise long form audit report. It would the browser would prompt you to the link. Okay. So similarly, in case of profit and loss items, so whether there is some divergent trend noticed by the statutory auditor in respect of profit and loss items, or whether the statutory auditor has noticed some short interest which has been charged by the bank. Obviously, as part of statutory auditor exercise, the auditor would be checking revenue also, not in a detailed manner, but on a test checking basis as part of LFAR audit exercise. Okay. Sameshwari, you are asking how many pages in LFAR? So I think there are 26 pages, Sameshwari, in this file. So obviously, if you are making comments, then it would be having even more pages, and some information is required to be given in respect of certain large accounts, and the pages would be definitely more in number. Okay. So, but again, just remember that this report has to be submitted by the auditor. Okay. And the name of this report is long form audit report, and it contains questions on virtually every aspect of the branch functioning. Okay, major aspects of the branch functioning relating to deposits, relating to advances, relating to relating to all assets, relating to liabilities, and obviously in respect of advances, the comments are more extensive. Okay. So the point which I was trying to show you, students, which is there in LFAR and it is also in your module. So it pertains to the meaning of large advances. Meaning of large advances. Now look, it is written here. What constitutes a large advance would need to be determined in the context of volume. For example, an advance may be considered as a large if year-end balance is in excess of 10 crore or 10% of the aggregate year-end advances of the branch. Okay. So on the same lines, and see students, this question number 1, test your understanding 1. Try this, very simple. Basic question we had discussed in last lecture. Yes, test your understanding 1. The financial statements of a bank are prepared in a specified format. Discuss legal provisions in this regard as applicable to financial statements of a nationalized bank. Yes, any answers, students? It is asking about legal provisions. So I had told you the legal provisions for preparation of financial statements of a bank, in which format it is prepared and where this format is contained, how it is presented. We had discussed on the very first day. No, Kambeshwari, every bank requires, but where are the provisions contained? The question is asking from you is where are the provisions contained? What are the legal provisions? Yes, which schedule is there? Yes, Dilip, you are writing correctly. Financial statements of a bank are prepared in accordance with the third schedule to the Banking Regulation Act 1949. That would be the right answer. So besides that, you have to write that third schedule contains uh, requirements relating to preparation of balance sheet and uh, profit and loss. Now, form balance sheet is prepared according to the requirements of Form A, and profit and loss is prepared in accordance with the requirements of Form B, which is contained in third schedule to the Banking Regulation Act 1949. So that would be a complete answer. Yes, Anjali, yes, you are also writing correctly. Yes, Srinivasan, that's fine. Okay. And as far as audit report is concerned, besides LFAR, the auditor is required to make a report in respect of following aspects. These aspects are to be covered in the audit report. Okay. Whether in his opinion the financial statements present a true and fair view of affairs of the bank, and whether he is called for any explanation or information, and whether it has been given and it is satisfactory, whether or not the transactions of the bank which have come to his notice have been made within the powers of the bank. So this is again specific requirement applicable to banks. Okay. Whether or not the returns received from the offices and branches of the bank. So obviously bank has at the total HO level. So nationalized bank are having thousands of branches. So it is required to be stated whether or not the returns received from the offices and branches of the banks have been found adequate for the purpose of audit, and any matter which he considers should be brought to the notice of the government. Obviously, you have to make note that reporting requirements of CARO 2020 are not applicable to a banking company. As I've discussed, as I've already told you in response to a question by Srinivasan, and I had also told you the logic behind it, probable logic behind it. I can't be sure that this is the logic. but I can say that this is the probable logic. Okay, and this is an important point, students. Remember, in I think 2 years back, there was a question on this aspect at CA final. You would be amazed to know. So just only 2 lines had to be written by giving by reading that question, that the provisions of Caro 2020 are not applicable to the banks, and many students would have definitely made mistake even in answering this simple question. Okay. यस अशोक जी, अब जूम अनम्यूट कर दीजिए, कोई पूछना चाहता है तो। Yes, students. Yes, Tambeshwari, what was your doubt? You were asking something, you can ask now. Yes, anybody who wants to ask on Zoom, you are unmuted. Yes, Tambeshwari, you wanted to ask something.
Yes, sir.
Yes.
Sir, can you explain in Hindi the consortium advantage?
Consortium advances. तो
Yes.
तंबेश्वरी consortium advances, पहले तो आप इनका मीनिंग समझिए। consortium advances वो होते हैं जब 2-3 बैंक इकट्ठा मिलके किसी एक पार्टी को लेंड करते हैं, किसी बोरोवर को लेंड करते हैं। क्यों? इसका पर्पस क्या है कि एक बैंक इतना रिस्क नहीं लेना चाहता। मान लीजिए 500 करोड़ का कोई लोन है, तो वो एक बैंक इतना रिस्क नहीं उठाना मांगता, तो वो 3-4 बैंक मिलके अपना अपना शेयर डिसाइड कर लेते हैं कि 50% मान लीजिए एक बैंक करेगा, 20% एक बैंक करेगा, 20% दूसरा बैंक करेगा, 10% दूसरा चौथा बैंक करेगा। इस हिसाब से ये तो है कंसोर्शियम एडवांस का मतलब। और जहां तक एनपीए क्लासिफिकेशन का मतलब है, जो आपके मॉड्यूल में रेलिवेंट टॉपिक है, उसके हिसाब से जो है आपको हर एक बैंक को अपना रिकॉर्ड ऑफ रिकवरी देखना है, उसको एनपीए उसकी एसेट क्लासिफिकेशन के लिए हर एक इंडिविजुअल बैंक को अपना देखना है। मान लीजिए एक बैंक में उसका अकाउंट ठीक चल रहा है, दूसरे बैंक में ठीक नहीं है, तो दूसरे बैंक को उसको जो उसका रिकॉर्ड ऑफ रिकवरी है उसके बैंक में, उसको उसके हिसाब से उसकी क्लासिफिकेशन करनी पड़ेगी।
मतलब कि सर उसके अंदर दूसरा बैंक इन्वॉल्व नहीं होगा ना?
हाँ, उसके अंदर नहीं होगा।
यस सर। वरना सर जब
मतलब
हम
उसको ये देखना है कि मान लीजिए उसने 4 बैंक से मतलब टर्म लोन लिया है जो 4 बैंक्स में डिवाइडेड है, तो लेकिन उसको देखना पड़ेगा ए बैंकों की, भाई मेरे बुक्स में उसकी इंस्टॉलमेंट्स जो आ रही हैं वो टाइम से आ रही हैं कि नहीं, मेरे बुक्स में कभी वो एनपीए तो नहीं बन रहा। और अगर कुछ ऐसा है तो उसको पहले बोलना पड़ेगा कि भैया आप इधर भी पैसे जमा कराओ, नहीं तो आपका अकाउंट इधर एनपीए हो जाएगा।
इट्स मीन सर
ठीक।
कि एक बैंक के अंदर अगर टर्म्स लोन ज्यादा है तो उसमें से अगर एक टर्म लोन नहीं हुआ पूरा तो हम उसको बोलेंगे एनपीए। लेकिन अगर बैंक की बात की जाए तो सर जो अलग अलग बैंक है तो वो इंडिविजुअली जब लेंगे ना तो उसके अंदर
हाँ, जब मतलब आप समझिए, मैंने आपको एग्जांपल दिया, 500 करोड़ का लोन है मान लीजिए, और दो लोन तो सेम पार्टी ने लिया हुआ है, लेकिन ये 200 करोड़ एक बैंक से लिया हुआ है सेम चीज के अगेंस्ट। ठीक है, बैंक्स ने मिलके एडवांस किया हुआ है, और 100 करोड़ एक ने दिया हुआ है। अब 200 करोड़ में तो उसका अकाउंट ठीक चल रहा है और 100 में ठीक नहीं चल रहा। ठीक है, तो 100 वाला अपने हिसाब से क्लासिफाई करेगा, 200 वाला अपने हिसाब से क्लासिफाई करेगा, ये मतलब है।
यस सर।
ठीक है।
यस सर।
यस, एनीबॉडी एल्स? Yes, advance to staff, Sanya, which you are asking. It is written in your module also. So जो भी स्टाफ एडवांसेस के हिसाब से सैंक्शन टर्म्स है, अगर वो है कि इंटरेस्ट जो भी सैंक्शन टर्म्स है उसके हिसाब से एनपीए क्लासिफिकेशन होगी. हम इसको देख लेते हैं, व्हाट इज रिटन इन योर मॉड्यूल. Like in some cases, in housing loan granted to staff members, uh, interest may be payable after recovery of principal. Okay, so first, the terms on which it is saying the terms on which loan is granted to staff, it may state that first of all, principal would be recovered and then interest is payable. Then in such case, interest should not be considered as overdue because the sanction is such. Okay. So in such accounts, they would be considered NPA when there is default in payment of principal on due date or default in payment of interest later on. Okay. Yes, anybody else, students? Any other question on Zoom, students?
सर पेज नंबर 10.31 पर सर जो स्टेटमेंट्स दिए हुए हैं सर, इट इज ओनली फॉर अंडरस्टैंडिंग पर्पस नो.
यस, दीज आर ओनली फॉर अंडरस्टैंडिंग. ये तो सिर्फ ड्राइंग पावर कंसोर्शियम अकाउंट्स में कैसे निकालते हैं, वो ज्वाइंट निकालते हैं. जो लीड बैंकर होता है वही एलोकेट करता है, वो सिर्फ अंडरस्टैंडिंग पर्पस के लिए. बहुत सिंपल सा कंसेप्ट है, ये हम डिस्कस कर चुके हैं पिछले लेक्चर में.
ओके सर.
यस, एनीबॉडी एल्स? Nobody? Okay, students. So we shall be meeting tomorrow to cover the remaining topic and also to do case study and MCQs relating to this chapter, that is audit of banks. So do join, students. Thank you. Yes, Ashok, meeting is over.